All right. What is up, tycoons? What's up, traders? Super excited for today's video, giving you guys an update on the 50K portfolio challenge. Now, I did start this portfolio challenge back in 2022, honestly, right before the bear market started in the very beginning of the year. And this is what I was holding right before the last update. So if you're not familiar, okay, what I do is I look for dividend stocks in this portfolio, and then I also run the wheel, which this is an option strategy where you sell covered calls and cash secured puts to generate more passive income on top of the dividends. So you can see in the last video, all right, I sold a bunch of options that expired April 21st. Some of these options expired in the money, and we'll go over those positions. I was able to collect $828, which was roughly 1.59% of the account in one day from simply selling covered calls and cash secured puts. So we'll go ahead and review all of these positions. Now, just because I have these positions and running strategies on these positions does not mean that you should follow these at all. Okay. In fact, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals on this YouTube channel are not registered financial advisors. Trading in stocks, bonds, commodities, and cryptocurrency involve a significant risk of loss and is not suitable for all investors. So the main thing that I want to go over is that I had about 12 or 13 stocks last time I did an update on here, okay? And you can see which ones that were my biggest winners and losers, okay? You can see here, my biggest loser at the time was ticker symbol BNGO. This is a biotech stock, all right? And typically biotech is considered the most risk on asset or the most risk on sector. So, in a type of bear market, you really wouldn't expect to see big outperformance and big growth. Now, when it comes to percentage of the portfolio, you can see here that it was only a 0.3% percentage of the portfolio. So very small, right? When it comes to investing very largely in a super risk on asset class, I was keeping that risk on asset investment very, very small. Now, my most recent positions that I got into, okay, were actually KMB. All right. I got into that one a while ago. And if you take a look, there's been a very good position that I got into. I'm up about 23.2%. And then my newest position I got into was SWK, which is actually Stanley Black and Decker. Now, I had a lot of interest in this one, and I'm building a position. I only grabbed the starter position of about 50 shares at an average cost of $73.96. And the reason I did that is because this stock actually just tested its pandemic lows. So we're in the year 2023, and this stock completely wiped away all of its gains and went back to its pandemic 2020 prices, and it paid a nice dividend. So it had some interest in my eyes. Now it's up about 8% here currently. Okay. And so these are the two newest stocks that I have gotten. Now, I actually did just sell a few stocks due to my covered call positions. I sold NNDM, which is Nano Dimension. Now, I do like this stock, okay, but it's in the tech sector and it's also, in the innovation and a little bit more of a speculative play. And this market is not the friendliest to those. So, being that it was positive, okay, and that I was able to sell these for a profit, I was very happy doing so. And I did these actually through covered calls. I actually sold my Gush as well. As you can see here, I owned 110 shares. And if we take a look, you can see I sold some covered calls on Gush. I sold the 120 strike. And if you take a look, Friday, all right, it ended up closing at $120.96. So these, contracts, these shares were sold. I sold 100 of them. I have about 10 left. I'm going to update you guys on the live portfolio afterwards. And you can take a look at the asset allocation as well as the portfolio breakdown and the sector allocation, the portfolio performance. So if you take a look here, all right, I basically had about $38,000 invested. And on that $38,000 invested, I was up about 6.5%. Now, being that I'm running the wheel strategy, okay, I like to keep a lot of cash in hand. and that cash is used to sell cash secured puts. So we had about almost $13,000 in cash as well. I'm going to go ahead and update you guys. Now on the dividend side, I was getting about a 6.5% dividend yield based on the 38,000 that I had initially invested. So roughly about a 6.5% dividend yield. And a large portion of that is due to ticker symbol ZIM, which is Zim Integrated Shipping Services. I know that this stock has a lot of attention right now from people looking to dividend chase and chase dividend yields. I've actually been in this stock for a while. If you take a look, my average cost basis is $26. So I got into the stock a while ago when prices were much higher. But the dividend and also selling covered calls against this stock, even though it says that, I'm down $689 right here, this is purely on the share value. All right, the way that this formula is calculated just on the average cost and the current price. But I'm actually up much more than that from collecting dividends as well as selling covered calls. So make sure to smash the like button, subscribe to the channel if you guys are new. I'm going to go ahead and break down the new positions that I have and what the portfolio looks like currently. And so now if we take a look, okay, we can see that there are a lot less positions. All right. Currently the positions that we're holding is let me go over these real quick for you guys. We have ticker symbol ZIM, we have METV, ticker symbol MJ, SWK, BNGO, iClean, KMB, Gush, PHO, and BKKT. Now, I did have, some S&P 500 shares, right? Like if we go back into here and take a look at the screenshot, I had ticker symbol SPY-G, which is the growth sector of the S&P 500. And I was up about 10% on those shares. And those did end up getting exercised in my covered calls. If you take a look here, I sold the 55 strike that expired on April 21st at 65 cents per contract. And if you take a look, we expired at $55.68. So in actuality, I actually lost about 3 cents per share compared to the total value that I could have gotten. But if you think about it, I've been selling covered calls against this. So that 3 cents per share, over the past 6 months, I've collected more premium than that. And I did a pretty good job actually of choosing the strike price and the expiration strike. I really actually wanted to sell out of a lot of stocks, so I sold a lot of aggressive covered calls, in my opinion. NNDM is another one. This is the Nano Dimension. I mentioned I sold out of that one as well. And so if we go ahead and go back to, the live portfolio, we can see that those stocks are no longer in there. But when we look at the cash amount right now, I have more cash than I do have invested in the market. So I'm actually very happy with this right now. Let me know in the comments down below any dividend stocks that you guys think I should be interested in. I have a full list of dividend stocks that I'm going to be looking to get into possibly. And I also think that commercial real estate is actually a place where I have a lot of interest right now. I know that commercial real estate is somewhere that many institutions, many advisors, many analysts, as well as the news and the media are projecting a lot of fear and a lot of FUD. But the old saying is you want to buy when there's fear in the streets, buy when there's blood in the streets, and you want to, sell the top, sell the high. So there are some positions that I'm looking to start. As I mentioned in my last video update, I did grab SWK, which was Stanley Black & Decker, and that is just a position starter for me, as I've got about 50 shares. Typically, I like to own 100 shares or more, so that way I can sell covered calls. You have to own 100 shares of a stock or more to be able to sell covered calls and generate more passive income. But I'm not going to fully dive into SWK and only try to throw my money in there. If you take a look, I have 50 shares of SWK, 50 shares of KMB, which is Kimberly-Clark. And both of those positions are green right now. Now, if we do get a pullback and a lot of this rally has been unsustainable and we end up getting some type of a pullback, I'm actually have a super low allocation to tech right now, to tech and growth in specifics. If you take a look at the portfolio breakdown right now, we can see what stocks I'm really in right now. based on that. But if you look at the sector allocation, about 50%, over 50% is in consumer discretionaries right now, which seems really risky. And technically, they are consumer discretionaries. But to me, they're a little bit more of staples, right? KMB Kimberly Clark is technically considered consumer discretionaries. But when you look at the assets that they own and the brands they own, it's things like tampons, it's things like diapers and wipes and things like that. To me, those are a little bit more closer to staples, where even in a recession, women are still going to need tampons, babies are still going to need their diapers, and we're all still going to need to wipe our butts when we have to go to the bathroom, right? So toilet paper and things like that. So I don't mind that, right? Stanley Black and Decker, I think that personally, there's still going to be home improvements, right? And what we're seeing right now is that home builders is actually the market to be in, right? Versus like home, buying and selling homes. This is actually a home builder market right now because that's just what I think, right? And so, Stanley Black and Decker is going to be home improvement tools and things like that. And, I think that we're, a few years down the line from things like those getting replaced, especially with robots. Now, I do think that there's a lot of potential, right? For instance, the Tesla robot is the most common one that people are expecting in the future. Now, in my opinion, I see massive potential for certain companies to be able to brand themselves as upgrades and as basically updates to the robots, right? So imagine that you start off with a Tesla robot and it just does very basic functions. Now, what if Stanley Black and Decker created a software and paid an engineer to create a software that would have it where, okay, hey, if you purchase our software and then purchase our hardware, aka the Stanley Black and Decker tools, now your Tesla robot or whatever robot it is can now, build you guys a new deck in your backyard, right? Or hey, now your robot can go ahead and repair the drywall in your home, right? These are some of the things that I like to think outside of the box on. Now, I could be just thinking way outside of the box and none of this stuff could happen. But to me, this is something where I think that if companies aren't looking to the future and aren't thinking in this type of perspective that I'm thinking in, where okay, where's the future heading to, right? If human labor is supposed to be replaced by robots, how can we capitalize off of that, right? And so this is one of the ways that I see that companies can capitalize off of this. These big name brands, these big reputable brands that have been around for a very long time, they can simply market their software and their hardware, aka their products, their tools that they sell to the humans. They can sell it as upgrades basically to the robots, and so people can go from there. Now, I'm not investing hugely based off of that thesis, but this is just stuff that I keep an open mind to. So I will be dividend hunting. Okay. There's a lot of stocks. I sold a lot of my Gush. If you take a look, I only have 10 shares left. Most likely I'm going to sell these 10 shares this week. I still do like energy, but energy had a really, really big spike based off of the OPEC oil production cut news. And so, we might be seeing that overreaction pull back now and really try to regulate and consolidate. And if energy, I'll be looking at XLE, I'll be looking at USO specifically. I don't want to go back into Gush, which is the 2x bullish ETF basically of energy. To me, that was a really good hedge to have in the bear market, and it was a great hedge for this portfolio during the bear market as energy prices really skyrocketed, and it helped keep this portfolio afloat. But for now, I have tons of cash in here, and I'm looking to start buying some stocks again. Right now, I'm not going to rush anything. I do think that this first quarter of the stock market of the year has been a little bit too bullish. I think that we are due for some type of a pullback. But if you look at the simple data, right, and the most simplest data that you can look at is the stock market performance the year after a midterm election. And so we have those in 2022, and historically 100% of the time the S&P 500 has been green within 6 and 12 months after those midterms. And so we're approaching the summer 6-month term. All right. And we're seeing that, lots of the stock market is green. So, I'm kind of using that as a basis. I'm not super, super bearish. I do think that a lot of stuff is potentially overvalued and we could see some type of pullback, but I'm still looking to, invest in this, in this market currently. So let me know in the comments below, what are some good dividend stocks that really have you guys' attention? There's a lot that I have on my watch list. I'm going to be dropping a lot more dividend stocks in the next month or two, just kind of going over the ones that I'm looking at, the ones that have some good setups from a technical analysis perspective. So that way you guys can be aware of the things that are on my watch list, what it is that I'm really looking at. And if I do end up purchasing anything in this 50K portfolio challenge, I will go ahead and update you guys so that you guys can see, the stuff that I'm interested in, the things that I'm looking at. I made plenty of videos on SWK, and I mentioned when it got down to a certain price level and hit a certain range that I'd be looking to grab some and grab a starter position. I may look to build out positions in all of these individual plays that I have. But most likely I'm going to be looking at some new dividend plays as, I think that there's a great opportunity with dividends. Now, I look at dividends a little bit different than other people. I have a video dropping soon about that, about my perspective on dividends. To me, they are more of a tool to fund a lifestyle and, essentially pay for your bills, right? And pay for expenses, right? A lot of people, when they look up and they show you guys like, oh, hey, these are the returns on the S&P 500 if you would have reinvested dividends for the past 50 years. To me, honestly, you have to own so many shares to really even be able to buy one share or two shares or three shares off of a dividend payout, right? Off of each dividend payout. To me, rather, I like to look at them as because they're taxed, right? So you get taxed on dividends. So if you think about it, if you're constantly just reinvesting those dividends and you're never, putting that cash that you receive to use, all you're doing is increasing your tax bill, right? And a lot of times people have automatic dividend reinvesting on. So you're not doing any technical analysis on that either, right? You could be buying at overbought conditions simply because you got paid a dividend and it's going to automatically reinvest, right? And so I want to be more in control of the cash that I receive from dividends. And as I mentioned, I think that dividends are a really good way to fund a lifestyle or, pay for expenses. So one way you could look at it is, how many shares of a stock do I need to own for the dividend payout to pay my car payment, to pay my car insurance, to pay my mortgage, right? And, once you start to do that and you say, oh, well, I have enough shares of X stock to pay my mortgage. Now I'm going to try and look at building another position and say, how many shares of this stock do I need to own to pay my car payment, right? And eventually you can have it to where your dividend payouts will, essentially fund your lifestyle, right? And so you can have all of your expenses paid out, through dividends and use those dividend payouts that are taxable income to actually put it to work and pay some of your bills rather than just increasing your tax bill, right? Because if you're just automatically reinvesting those dividends, a lot of times, you're not really seeing a significant amount of ownership in the company from the dividend payout, as typically the dividends are 3, 5, 10%. Depending on what the stock is and what the dividend yield is. So if you own 100 shares and you're getting a 5% dividend yield, maybe you'll be able to get an extra 5 shares in a whole year, versus you can look at it like, okay, well, those 5 shares, how what kind of bills could I have paid with those, right? Because you're still going to have to pay taxes on those. And to me, it seems a little bit better to put that taxable income to work, as we all do with, if you have a job or you have some type of business, you're receiving income and then you're paying taxes on those and you're using that taxed income to, fund your lifestyle and pay for your bills, pay for your expenses. That's the way that I personally look at dividends. It's not financial advice. This is just simply a different perspective and different opinion, right? And so if you look at, okay, well, in 10 years, in 15 years, if I can build myself a solid dividend portfolio and I can have a dividend stock that pays this bill, I can have a dividend stock that pays this bill, I can have a dividend stock that pays this bill, and you have a portfolio of 10, 15, 20 different dividend stocks that, over time, once you fully build those positions out, they fund your lifestyle completely. And now you no longer have to worry about, okay, well, what happens if I lose my job? Or what about my retirement fund? Or what about my retirement income? Rather, these dividends will be paying for your lifestyle and your expensive. Now, of course, there's going to be tax implications as well. So, of course, be sure to, consult with the CPA. But there's many, many different ways to look at this, right? There's many rich people that simply own tons of dividend stocks, and you know what they do is they get 100,000, or they get $500,000, or they get $1 million a year in dividend payouts. You know what they do? They say, "How can I spend this? What's the easiest way for me to spend this?" Right? Because I'm rich already, and now I don't have to worry about making new money to spend money and buy myself luxury items. I can just simply spend my dividend income, right? And so they'll take $100,000 dividend payout and they'll go buy themselves a nice Rolex, or perhaps they'll go buy themselves a nice car. They'll go get a new BMW, right? Or perhaps they'll go get some fancy jewelry, right? They'll get a nice necklace, different things like that. So, I just kind of wanted to open you guys' eyes, to the possibilities of dividends. Besides just constantly reinvesting them. To me, I'm not a super big fan of dividend reinvesting. Rather, I like to treat it as earned income, and I want to put that earned income to work and really try to pay expenses, right? Because if you think about it, if you're paying expenses, those expenses will be a write-off, depending on your tax situation, if you have your own business and different things like that. But you want to try to pay off expenses with some of this earned income, so that way you're not just owning more shares, you're only and just never really seeing a return, and you're just increasing your ownership slightly by 1, 2, 3, 4, 5% a year, and then having to constantly pay taxes on that. Rather, you can put some of this money to work. And if you combine it with the wheel strategy, where you're also selling covered calls and creating more passive income on top of that, and you're basically leveraging your ownership of the shares, plus you're receiving the dividend payout, then that's when you really start to compound the growth wealth, and really start to compound the gains that you see, versus like, okay, hey, well, this is a 5% yield per year, but now if I sell covered calls against it, maybe I can turn that 5% yield into a 7, 8, maybe even 10% yield, just depending on how aggressive you are with selling your option contracts. So that's the way that I like to look at it. That's the way that I'm viewing things personally. And, there's a bear market. It's been a bear market going on. There's a lot of stocks that have been on sale. I've scooped up a couple stocks on sale. I've bought a couple stocks, before they bottomed, and I'm down big on them. Right? There's plenty of positions. You take a look. BNGO, I'm still down 42% on this one. MJ, this is basically the cannabis ETF, still down 36%. Zim, even my top dividend stock, I'm down 26% on my shares. But I'm not really rushing into these things, right? There's still plenty of other positions I'm green on. We have BKKT here, which is essentially a crypto company. If you don't know, Backed Holdings is owned by the ICE, which is the Intercontinental Exchange. This is the same company that owns the NYSE, the New York Stock Exchange. And in my opinion, if crypto does see regulation and does have a future, a regulated future globally, I think that Backed Holdings, ticker symbol BKKT, is in an excellent position to benefit from that crypto regulation and mass adoption of cryptocurrency, being that they're owned by the same company that owns the New York Stock Exchange. I think that they are going to have some really good connections, essentially, and some really good partners, and some deals may approach them that may not approach other companies and opportunities as well. So that's essentially it for today's video. Just wanted to give you guys a quick update, let you guys know what stocks I sold. And let you guys know that I'm looking to buy some stocks, trying to focus on dividend stocks for the next round of stocks that I purchase. Over 50% cash right now in the portfolio, so I have plenty of cash. Let me know what stocks you guys think that I should be looking at to potentially add. Let me know your favorite dividend stocks, and also smash the like button and subscribe to the channel.